What's going on, everybody? Happy Saturday. With the new Money School live stream coming out this next week, I wanted to introduce the trading platform that we'll be using, and then the custom views and just kind of what I'm looking at to measure the performance of my own stocks, and also skim through the indexes and see what else is going on out there. This is Thinkorswim by Td Ameritrade. This is kind of a workhorse platform. It's a little bit more professional than a lot of people like, versus, Robinhood or some of the more mobile apps that, have a little bit easier interface. I like this platform just because I've been on it for a long time. And TD Ameritrade has full service brokerage accounts, which are better for some of the stuff that I'm doing. So just diving right in the custom view and the watch list, this is the Dow Jones. This is an index that I really don't pay much attention to, but for the purposes of explaining my view, this, works well. We have the ticker symbol, the company name, and then just, the sub-industry, what it does. So you can, see it really briefly. The last share price, whatever it traded at whenever the market was open, the market cap in millions. So you can easily see scale and sort through, see size over different indexes or portfolio holdings. The price to earnings is just, we'll go through the basics of all of this, but I keep PE close just to see relative price based on how much money it's making, seeing, where earnings are at, and just relative price. PE is more important than the last share price. Market cap and PE are going to go hand in hand. That's why they all there's a method to the madness. Percent change is just the price share change over different periods. And this first category is 30 days. The middle category is 90 days, and the last category is 180 days. So what this is showing me is the percent return over these periods. So looking at over the last 30 days, the best performing stock in the Dow Jones is Salesforce, Apple, Nike. I mean, it's really pretty easy to see. And then just sorting it over different times. I like to sort through different indexes and see, over the last 60 days or 90 days, Apple's been the best. Over the last 6 months, Apple is still the best, up 72, 73%. I like to look at that just as general momentum to see, how we've performed over different time periods. It's just a really quick snapshot of that. And then the Stochastic Oscillator, RSI and Williams percent and Stochastic are all similar. I think Stochastic is the easiest to read and simplest for what we'll be doing. It basically just measures the closing price over the last 14 days, and it's going to give you a reading of if a stock is overbought or oversold. Generally, over 80 is an overbought stock, and under 20 is oversold. So it's really easy to kind of see, it's basically a reversal indicator. You don't want to buy when something is really overbought or really oversold. Over the long term, stocks can stay overbought or oversold, so it's not always perfect. But I do like to look at it and just kind of generally see, like, does a stock have a lot of recent momentum? The first couple categories of my percent change, are month, quarter, half year. And that's also because, last 180 days is the recovery of Corona and all of, the post-Fed action. So I think these are important time periods to look at. And then Stochastic is going to indicate, I'll look through the stocks that I want to add to, and I'll just look at Stochastic and see, what is currently getting beaten up. And if I believe in it long term, I'll kind of be contrarian, and whatever is getting oversold, I'll dive into. And if I need to trim something, it's usually when Stochastic is getting, kind of up there in the 75, 80, 85 range. So that's how I look at this watch list. You can easily apply it within this to, different categories, and continue to see, what is really getting, bought up in the broader market, what's getting sold, what's doing well, what's getting, beaten up. And this is just something I sort through over and over. And that's one of the reasons why I like this platform. Last thing on this video, introducing bar charts. There's the kind of chart that you want to do. A lot of people like line charts or whatever. I like bar charts because they give you a little bit more information just really quickly. The way to read a bar chart is the dash on the left is the price where the day opened. The width or the length of the bar is the low of the day and the high of the day. And then the right bar is where it closed. So you can easily see days where, there's a lot of technical analysis that goes into, what these different bars mean. I don't pay a ton of attention to that long term. I do like to see, days where they, bigger price activity and then pushing that against volume and just seeing, are these big trading days? Are they on low volume? Are they high volume? Again, it's just about looking at the same thing from a bunch of different perspectives. And I like the granularity of a bar chart. And then you can also hop into one of the things that I like about TD that's easy is the tick bar chart. And ticks are just groups of trades. Rather than looking at it over a time period, it's over a certain amount of trades. And you can see, this 1,000 tick bar chart, you can see the volume of where, this can be an indicator of if professionals are making these trades or if they are home gamers, and the lot size, that you can look at it from a couple different perspectives, and we'll go through that later on. And that's more trading than investing, but I do like to keep an eye on it. And then when I'm looking at stocks day to day, I'm looking at tick bar charts normally. So just understanding the chart and what you're going to be seeing in this, I think, is important. We'll go through more features and stuff, but one of the things you're going to see a lot on here, moving averages, which are basically taking up this blue line is taking up the last 50 days, dividing that out and plotting that over time. That's the 50-day moving average. And then the orange line is a 200-day moving average. So it's just the last 200 closing day prices averaged out, plotted over time. These crosses, when this happens, again, we'll get into that at a later date. But this is just the typical setup that I have for the Money School account. Everything should be set up and ready to go by Tuesday, Wednesday at the latest. And again, everything's going to be fully transparent. All of the trades logged, live stream every day, check-ins on the market and the core positions. And then that's going to feed a lot of the learning tools and building block lessons that are going to be coming out on top. I get a lot of questions about order entry and just a lot of the basics. So starting with this live stream, we're going to build an account from scratch, and we're going to, some of the stuff might be a little beginner for some, but it's all good. We'll keep it going quick. And there's just some basic building blocks that we want to get out there and make sure that, everybody's comfortable putting on their trades and managing it, knowing what's going on, and, being able to just really fully manage their money and know what they're doing without, making any silly mistakes or, market orders and limit orders and stuff like that. It's simple once you get it down, but it can be overwhelming when you're just getting started. So, and I know that's where a lot of people are at. So we're going to start at, square one, and we're going to build the whole portfolio over the course of a month, and then we'll just actively manage it forever. And that'll be on the Patreon going on in perpetuity. So again, thanks for your support of the Money School. Hope you're having a great Labor Day weekend, and I will be in touch next week.